Welcome to Mortgage Matters with Pinnacle Mortgage Planning.
So one of the things I've learned from doing this show is that in real estate, there are a lot of terms that we consumers know and that we don't know, and a lot we think we know. And the worst of these, I think, are the terms that we think we know. Based on what we think we know and what we don't really know, we could make some really bad decisions. So we have a couple of guys here who are going to define some terms for us and maybe help us out with our own mortgage planning. We're talking today with Travis Newton from Northwest Lease Purchase and Steve Valenta from Pinnacle Mortgage Planning. Rod McLaughlin, your host and producer today. So we want to talk specifically today, Travis. Let's start with you about something we call the lease option. Tell us a little bit about that. Could you define that for us first?
You bet. Thanks, Rod. I'd like to preface, too, that I am a licensed real estate broker in Washington and Oregon with Coldwell Banker. The Lease Purchase Company is a subsidiary of that, something that we are also involved in and can handle. The typical lease option is very simple. It's a regular lease agreement with an option to purchase at a later date. That's as plain as it gets.
So if I were going to buy one of these properties using this process, how would it work?
Well, you would give me a call first. You would then, I would take your information. I would try to pre-qualify you on the phone, ask you what you're looking for, what kind of home you're looking for, what price range, and kind of do a qualification. And then I would hand you over to my partner, Steve Valenta, to get you pre-qualified and to know if we're going to be able to do a lease option with you and that you're going to be able to qualify within a 2-year or 3-year term.
So a lease option, as I understand it, is basically this. If you want to buy a property, you put some extra money in there. You have an agreement with the seller where you're actually putting in a little extra money that applies towards the price of the home or the property, and that kind of goes towards the purchase price, like we explained. But if you decide at some point that you don't want to continue, you don't have to continue. It's an option. Is that a fair way to describe it?
That's correct. In the lease option contract, the seller is bound to sell, but the buyer has an option to purchase. They're not bound to purchase. They have the option to purchase. So the buyer puts up an upfront option money to the seller that is non-refundable. They also pay market rent, and they also pay a rent premium of, it's variable, of anywhere from $100 to $500 a month on top of the rent that is applied towards the down payment and closing costs when they go to purchase.
Let's go to Steve Valenta, Pinnacle Mortgage Planning. We want to expand a little bit about this, Steve, or on this topic. We want to find out, for example, first tell us, for whom would the lease option be most appropriate? What kind of buyer?
It's for a buyer that is able to afford the payment of a home purchase, but for whatever reason are not able to qualify today, but are very likely to be able to qualify in 18 to 36 months, whenever the term is agreed upon.
So people wouldn't qualify because of bad credit, for example, or just lack of a down payment?
For the most part, certainly because of the economy and the recent housing crisis, most of the reasons are surrounded around credit, whether that is because they've had a foreclosure or a bankruptcy or just some damage to their credit, and they just need some time to improve that, and that would some time to be able to fix those things that are wrong with their credit, and then and be able to qualify when the term comes up.
One of the themes on this program, Mortgage Matters, from day one has been that market conditions are unique right now because of the economic downturn from 2008. We're having to create new ways for people to get into properties. And Travis, we can go back to you for this if you'd care to comment on it. Are we creating more ways for people to get into homes now, ways that may not have been available in the past? And with that in mind, how long have lease options been available? Is this a fairly new term, or is it something that's been available for some time?
Great question. Lease options are nothing new. Lease options have been going on for the dawn of time, as far as I've heard. But right now in our current marketplace is the most opportune time that I've seen to actually do a lease option. The market prices are down. The sellers are having a harder time selling for market value. and the buyers are having a harder time qualifying. So it helps the seller and able to get a value of their home and put a tenant buyer in a home instead of just a tenant, somebody who's going to purchase the home at a later date, hopefully take care of it as the way a homeowner would. And then for the buyer, they're building their kind of forced savings plan through their option fee up front and their rent premium. So by the time they get to purchase down the road, all their money is set aside in an escrow account waiting for them to just qualify.
As a broker, do you find you have to be more creative in present market conditions? Or, I mean, you have to be able to adjust based on the market needs. And that would be the case now. Do you find more people pursuing options like this, the lease option?
That's right. Most instances of the houses that we put on the market, most of the time the seller's backup plan is to actually rent the home out. So we provide them an option to do a lease option and explain the benefits to the seller and go forward that way. It creates a whole different pool of buyers, as you know, in addition to what a normal agent would be able to acquire with people who are qualifying now for a home.
So let's go back to Steve Valenta from Pinnacle Mortgage Planning. We were just speaking to Travis Newton from Northwest Lease Purchase. Tell us, Steve, when you're speaking to a buyer or a potential buyer or a seller, a potential seller, do you advise them on things like the lease option? I mean, do you say, here's what we have on the table, here's what might work well for you?
Yeah, it's always an option when we explain to them how it works, and if they're comfortable with it, then it's absolutely an option. So when I take in a client and do a pre-qualification process, if they're not able to qualify due to credit, I do give them that option of what it would take to maybe get into a home that they would want to purchase. And it works out really well for the client because they're able to get in the home that they actually want to live in long term, starting to make payments on it to build up savings for the down payment, and be able to turn that into a purchase down the road.
This is Mortgage Matters, brought to us by Pinnacle Mortgage Planning. So let's go through the process. How does a buyer get qualified for a lease option? Do we want to go to Travis for that? Steve, can you set us up with that?
Well, the process works by first contacting Travis on a particular property or just in general looking for properties that might qualify for the program. At that point, then Travis will connect them with me, and I will have a conversation with them and make loan application with them. We determine right away why they can't buy today. And if they can, well, they may not want to do a lease option, and we'll just be able to have them qualify and purchase a home now. But usually what we do is we determine what hurdles are stopping them from being able to purchase, whether that be credit or down pay, not having enough for a down payment, or a payment shock, numerous reasons, but we determine that right out of the gate. Then we answer the question of how do we solve these hurdles? How do we handle these problems? Once we determine that, then we determine what time frames it's going to take to solve those problems. Mm-hmm. And if they're a good candidate for being able to qualify in 18 to 24 months, then I release them back to Travis, and they find the property that works for them.
Why 18 to 24 months?
I think that's what we find the length of time is needed to solve some of these hurdles. So some of the credit repair things that need to be done aren't a quick fix. It's not overnight. So, for example, if somebody has filed a bankruptcy, there's generally a minimum waiting time of a 2-year waiting period. So that's often why we say that time frame.
And you used a term a moment ago, payment shock. Did you say that? What does that mean?
Payment shock is, for example, we'll have a client that will say, I can afford a $1,400 rent payment, but when I run the payment scenario, if they were to actually purchase the home and their payments are actually going to be $1,800 a month, mm-hmm. If the client's not comfortable with $1,800 a month, it's not a good fit for them to get into this situation. So that term payment shock is if the shock of the long-term housing payment far exceeds their comfortability in comparison to what their rent payments are, we'll be able to say this isn't the right option for you. Because what we don't want them to do is to rent the home, all of a sudden 2 years from now they're ready to purchase and the payments are way higher than they're comfortable with. and it doesn't work out.
And to use those figures again for an example, how could your payment or projected payment go from $1,400 to $1,800 a month? Where would that additional $400 come from?
Well, often rent payments are lower than the purchase price of the property. The way that Travis has set up the program is to have the rent premium, which is the amount over and above market rents, to help balance that out so that the payments aren't that different.
Steve Valenta from Pinnacle Mortgage Planning. We're also with Travis Newton from Northwest Lease Purchase. We're talking about the lease option. So we've talked a little bit, Travis, about which buyers might find this process or this type of payment plan most suitable for them. How do you advise people? I mean, how do you know that somebody would find the lease option the best option for them?
Most of the time, the people that want to do a lease option are ones that have either been homeowners in the past and just can't qualify, and they want to continue being a homeowner and be in a home that they know they can't get kicked out of by a landlord selling the property out from underneath them, and they have to move. So all those types of things are very important to potential buyers of the lease option side.
And we've gone through the credit pre-approval process a little bit. We'll probably expand on that in our next segment. We also want to talk about the length of contract. And, Steve, that might be something you can address. Typically, you said 18 to 24 months. Is that what we mean when we're referring to the length of the contract?
Correct. Travis, being licensed to deal with the contract, I'll just defer to him because he will meet with clients and determine the amount of time that they're comfortable with.
All right, we want to talk a little bit, too, next segment. We'll cover that next segment, Travis. We also want to get into how are the market rates determined and some other issues that I think, if you're considering the lease option, those are all germane to what should go into your consideration. So let's get to that in the next segment. And remember, if you're a purchaser or a seller, this is all information that's very germane to you. The lease option is a way to go if you have no other means possibly of getting into the property you want or getting the property you have into the arms of a buyer. This is Mortgage Matters, brought to us by Pinnacle Mortgage Planning. Back with all that next. This is AM 1550 and 1550talk.com, Vancouver's talk station.